Wait, I owe how much? Let me ask you something. Is your business an LLC or is it taxed as an S corporation? What's the difference? Thousands of business owners pay more taxes than they legally have to every single year. Not because they're doing anything wrong, but because they don't understand one simple concept. The difference between an LLC and an S corporation or an S Corp. And here's the surprising part. Most people think that they're choosing one or the other. They're not. Let me show you why. One of the most common questions I hear from business owners is, should I form an LLC or an S corporation? Well, it's a great question, but technically it's the wrong question. Because an LLC and an S corporation are two completely different things. An LLC is a legal business entity created under state law. An S corporation is simply a tax election recognized by the IRS. Think of it like buying a car. The LLC is the car. The S corporation is simply one way that the car can be taxed. The vehicle doesn't change, only the tax treatment does. In fact, many LLCs choose to be taxed as S corporations. Understanding that one distinction clears up a lot of confusion. Now let's talk about why this matters. Suppose your business earns $250,000 before paying yourself. Depending on how your business is taxed, that decision could potentially affect thousands of dollars in payroll taxes. Let's break down how it works. First, let's talk about the LLC. LLC stands for Limited Liability Company. One of the biggest reasons business owners choose an LLC is liability protection. When properly formed and maintained, an LLC may help separate your personal assets from your business liabilities. That protection isn't absolute. Personal guarantees, fraud, or failing to properly operate the business can affect that protection. That's why it's always important to work with qualified legal professionals when setting up your business. Now, let's look at taxes. By default, a single-member LLC is generally taxed like a sole proprietorship. A multi-member LLC is generally taxed like a partnership. In both cases, the business income typically passes directly through to the owner's personal tax returns. The business itself generally doesn't pay federal income tax. Instead, the owners report that income personally. Now here's where things get interesting. An LLC can elect to be taxed as an S corporation by filing the appropriate election with the IRS, assuming it meets the eligibility requirements. The LLC doesn't disappear. It's still an LLC under state law. The only thing that changes is how the business is taxed. So why would someone choose an S corporation taxation? Well, one of the biggest reasons is payroll taxes. Let's go back to our example. Your business earns $250,000. Under the default LLC tax rules, a substantial portion of that income may be subject to self-employment tax, depending on your individual circumstances. But if your LLC elects S Corp taxation, the rules work differently. You're generally required to pay yourself a reasonable salary for the work you perform. That salary is subject to payroll taxes. However, business profits distributed after paying that reasonable salary generally are not subject to self-employment tax, although they remain subject to federal and, where applicable, state income taxes. For some businesses, that difference can create meaningful tax savings. But there's an important catch. The IRS requires owners to pay themselves a reasonable salary. You can't pay yourself tens of thousands of dollars while your business earns several $100,000 and expect the IRS to agree. Your compensation should reflect the work you actually perform, your experience, your responsibilities, your industry, and what someone else would reasonably earn doing similar work. Trying to artificially reduce your salary simply to avoid payroll taxes could create problems during an IRS examination. There is another factor many business owners overlook. Operating as an S corporation usually comes with additional administrative responsibilities. You may need payroll services, quarterly payroll tax filings, corporate tax returns, maybe additional accounting work, state filing requirements, and potentially higher accounting fees. Those additional costs should always be weighed against the potential tax savings. Another common misconception is that an S corporation provides better liability protection than an LLC. Generally, that's not true. The liability protection comes from the legal entity itself. The S corporation election only changes the tax treatment. It doesn't create additional liability protection by itself. So when someone says, "Oh, I switched from an LLC to an S corp," well, what they often really mean is that the LLC elected S corp tax treatment. The legal entity usually stayed exactly the same. Another question I hear is, when should I make the S Corp election? Well, unfortunately, there's no universal income threshold. Every business is different. The answer depends on factors such as profitability, expected income, payroll costs, state taxes, administrative expenses, retirement planning opportunities, and your overall financial goals. A good advisor isn't simply trying to minimize this year's taxes. They're looking at the bigger picture, your cash flow, your retirement plan, business succession, risk management, estate planning, investment planning, and how your business fits into your overall financial life. At the end of the day, both LLCs and S corporation taxation can be valuable tools. One isn't automatically better than the other. The best choice depends on your business, your income, your future plans, and your overall financial situation. So remember this, an LLC is your legal structure and an S Corp is your tax election. They aren't competitors, they work together. Understanding that one distinction can completely change how you think about your business. If you're wondering whether an S Corp makes sense for your particular situation, it's worth having a conversation with your financial planner, your CPA, and/or your attorney. Working together, they can evaluate the legal, tax, and financial implications so you can choose the structure that's appropriate for your specific circumstances. Because successful business planning isn't about choosing the most popular option. It's about choosing the option that best supports your business today and the future you're working to build. Thank you for watching, everybody, and please don't forget to subscribe. All right, until next time. Grazie.